Oh, it's your tax attorney, Nafisa Manir Fudayil. Welcome to Tax Roadmap, where we train tax attorneys, CPAs, and enrolled agents who to specialize in tax representation and tax controversy work. Why? Because it's a lucrative specialty and it helps them become their client's hero. So, again, welcome to Tax Roadmap. We're going to be on this journey together where we talk about this whole field of tax representation, tax controversy. Why? Because I am on a mission to let everybody know about this specialty so we can have more representation in this area. We need more women attorneys and CPAs to specialize in this area, to work with small and medium businesses in this area. We need more minority representation to work with small businesses and medium-sized businesses in this area. And there's just not enough of us to meet the demand. So I just came to sound the alarm and try to encourage everyone to really consider this as a specialty area that they can focus on. But in the meantime, we're just going to spread news about what's going on. We're going to get into the details of exactly what is tax representation and how we, in the different aspects of it. And so I'm glad you joined me today, and I hope you join me on the next few coming weeks and months as we dive into it. But let's get into it today. Today, what we're going to talk about is the 5 things you have to know about the IRS if you are going to be dealing in tax representation and tax controversy area. Now, let's get started. And keep in mind that I know most of you all who are professionals, right? Who are attorneys or CPAs, you already know that you don't have to believe the hype about the income tax going away because you already know that's not going to happen, right? But the 5 areas that we want to talk about um, are going to be the first one is in this tax representation, tax controversy field. You hear a lot of talk about the offering compromise, or you hear a lot in the advertisement. Oh, come and see us so you can get pennies on the dollar, or come and see us and we'll eliminate your tax debt. This is over promising. This is trying to let people know that you can create magic. You can't create this type of magic. Okay, you can't create this type of magic. Yes, there is an offer and compromise program where you can help represent your client if they meet certain criteria to be able to eliminate some of their debt. But keep in mind, the IRS only approves about maybe 30%, give or take each year of all the offer and compromise applications that they get. They only approve about 30%. So we're not talking about a high success rate on this. So just keep that in mind, that don't believe the hype when it comes to offer and compromise. A lot of people aren't getting their tax debt eliminated. That's number one. Number two is, even when it comes to the IRS seizures that people talk about, oh, the IRS is going to seize your house, the IRS is going to seize your business property. The reality is, these types of seizures are very rare, very rare. In fact, for the fiscal year 2023, the IRS only has 65 seizures. Only 65 IRS seizures out of the millions and millions of taxpayers that owe the IRS. And this is only related to, like I said, homes and business property. What usually happens and what the IRS usually uses as an enforcement tool is seizing bank accounts, seizing wages. That's why you have wage garnishment, and seizing bank accounts, and maybe even seizing brokerage accounts. That's usually the enforcement tool that the IRS uses. Okay, more so than the actual seizure of personal residence and business property. Okay, so that's just something to keep in mind. The third thing is going to be, which is a misconception a lot of people have, most people believe that your retirement accounts cannot be touched by the IRS. This is not true. So you will have to advise your clients that their retirement accounts can be seized, can be levied, liens can be put on their retirement accounts. They can levy those retirement accounts. So they are not exempt. Okay. But the IRS can only get from your retirement accounts what your clients can get from their retirement accounts. So if they're not vested in those accounts yet, if they have not met the retirement age for those accounts where they have access to them, then the IRS does not have access to them. Okay. But when your client gets a retirement age where they're able to access that money, or they are vested where they're able to access that money, then the IRS can levy that money. So just keep that in mind. That's a lot of misconception people don't have, because I know creditors cannot reach certain retirement accounts, but the IRS, their hand is long. Okay. All right. So um, the fourth thing is that the IRS does not have an unlimited time to be able to just come after folks. They can't just come after folks for 15, 20, 30 years. They just can't come after folks for tax debt. There is a 10-year statute of limitations on collections. Okay. There's a 10-year statute of limitations on the collection. So the IRS only has 10 years to be able to collect that money from the time that that particular debt was assessed on that particular tax return for that particular year, right? So if you have a client that filed their tax return in 2010 and they owed some taxes and they haven't been paying on them or whatever, for whatever reason, and there's been no stoppage, right? Then that was 2010. We're in 2025. So that 10-year statute of limitations is up. Okay. So once that tax debt is assessed for that year, whatever year it's assessed for, that starts the clock ticking on the 10-year statute of limitations. Now, it can be told, it can be stopped, depending on different things that may happen, right? But for the most part, that's going to continue to run for 10 years. And after 10 years, that debt is going to be wiped clean. Okay. So that is our fourth thing. And the fifth thing is bankruptcy can be a powerful tool, can be a powerful tool to use to eliminate taxes, right? Now, it has to be specific taxes, right? Because we're talking about income tax, individual income tax here, right? We're not talking about trust taxes and payroll taxes and stuff like that, that businesses would incur. But for income taxes, bankruptcy can be a tool that is used, but there are certain stipulations. And most of this relates to how old the tax debt is. It has to be meet certain requirements of being what's called old tax debt in order for it to be eligible under the bankruptcy rules. But it is a powerful tool that can be used to eliminate tax debt. So those are the 5 things that you need to know if you're going to practice in the area of and specialize in the area of tax representation and tax controversy work. The first one is the offer and compromise. Those are very rare, right? Only 30% are approved. The second is IRS seizures are very, 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 very rare when it comes to housing and business property. Okay. It's heavy on the wages and it's heavy on the bank accounts and other brokerages accounts and things of that nature. But not when it comes to your client's personal residence. The third thing is that retirement accounts are reachable by the IRS. Okay, they are reachable by the IRS. If your client can reach them, the IRS can reach them. And the fourth is the IRS has a 10 years, a statute of limitations to collect against you. I mean, collect against your client. And the fifth is bankruptcy can be a powerful tool. So just remember that if you're going to be practicing this in this area or dealing with the IRS, those are the five things that you need to know. So thank you for joining me, Nafisa Manira Fudayil, here at Tax Roadmap. And I hope to see you next time. If you need to know more information, contact me at Tax Roadmap LLC. Thank you so much. Bye bye.